Bank Indonesia's decision doing little for the rupiah, which has set successive record lows this week. It's now trading at 17,600 to the greenback. The currency has depreciated by around 5% year to date, making it one of Asia's worst performers. It's also breached the symbolic 17,000 level, bringing back memories of the 1998 Asian financial crisis. Indonesia has come a long way since, but markets at this point are still uneasy. CNA's Olivia Marzuki looks at what is driving this slide.
For many Indonesians, 17,000 is not just another number. It is a psychological trigger, an echo of 1998, when the rupiah collapsed during the Asian financial crisis. Inflation surged, banks failed, riots spread, and Suharto's three-decade rule ended. Today, Indonesia is stronger. Banks are better capitalized, foreign reserves are healthier, growth remains above 5%. So why is the rupiah, again, one of Asia's weakest currencies?
The increase in oil prices is certainly unfavorable, and is leading to some concerns on the inflation front. With regards to domestic factors, there have also been some worries, and generally investors have worried about the fiscal situation, also the central bank independence.
The deeper issue is that Indonesia's risk premium is being repriced. Investors are worried that higher oil price will increase subsidy and compensation costs, weaken fiscal credibility, push bond yields higher, and limit Bank Indonesia's room to ease policy.
Those worries are visible across markets. Investors are also questioning policy credibility and the direction of state influence in business. Stocks have slumped. The rupiah has hit record lows. Bank Indonesia has intervened, and volatility is eroding investor trust. The Finance Ministry urged Indonesians to bring their offshore assets back home within 6 months without a tax amnesty. Analysts say that could help liquidity, but it could also signal deeper concern.
This measure alone, while it could obviously support liquidity, it is not enough to support confidence. On one hand, it is actually quite positive because it supports the domestic liquidity and potentially that could ease some pressure on the rupiah. And it also sends a message that the government wants to strengthen compliance. But of course, if markets see this as a sign that authorities are becoming worried about capital flight or about dollar shortages, then it could mean that sentiment could be again hit because of this measure.
Still, experts agree this is far from 1998. The rupiah is weaker, but Indonesia's economy is not breaking.
There is no comparison with 1998 crisis. Indonesia's economy looks much healthier. Inflation is quite contained. The banking system is much stronger. There are much more regulations, and the political situation is also not comparable. The unhedged corporate foreign debt does not seem to be a particularly big problem right now. And if we look at the external debt relative to GDP, of course, it is much lower.
The second quarter also means higher demand for US dollars, for dividends, coupon payments, imports, and other corporate needs. So even if global sentiment improves, the road ahead may remain rocky for rupiah.
Because investors are charging Indonesia a higher uncertainty discount. The policy response should therefore go beyond intervention. BI can smooth volatility, but the government must strengthen the confidence story through clear fiscal discipline.
Rupiah depreciation actually has some upside. It could draw more foreign visitors. Families receiving remittances also gain more for every dollar sent home.
Some of the other sectors that could also see the benefit of this weakness in rupiah would be exporters, for example, because there are companies that are earning in foreign currency but paying some costs locally, and that means that they could become more competitive. We could also see tourism getting some benefit. But having said that, I would really not overstate the positives here. I think the costs of a weaker currency are really much broader. Say imported inflation because of higher fuel and food costs, how that affects purchasing power for households in Indonesia. And also, if you add to that from a more government perspective, the added cost of servicing the foreign debt. So those, I think, negatives really have bigger weight, in my opinion, right now compared to the positives, and particularly also because of the pace at which the rupiah has declined.
President Prabowo has tried to downplay the risks. Politically, that may resonate. Economically, it is harder to dismiss. So a weaker rupiah may help some exporters, tourism, and remittance households. But for most Indonesians, the burden comes through everyday prices, and for the government, through subsidies and debt servicing. The question is, who pays?